Hello, everyone. What a pleasure to be with you here today in Sun Valley. I'm Leslie Kaufman. I work at Bloomberg, and we have a terrific panel for you today. I think we're going to dive right in. I'm going to let them all tell you a little bit about themselves. I think the place where we'd like to start, because investment means so many things, is just have everyone describe a little bit the pool of money you are swimming in, because there are lots of different buckets of money out there. And so I'd like a little bit. So Chante, why don't we start at your end of the couch and move this way? Tell us a little bit about the investment pool you're dealing with.
Yeah, sounds good. Hi, everyone. It's great to be here. Excuse my voice. I was on a 4 a.m. flight from New York, so slowly waning into the day here, but really excited to be in Sun Valley. I've spent most of my career working with early stage and growth stage climate tech companies, and for the past 2.5 years, I was building a $10 million venture studio focused on closing the first valley of death in climate tech. For those who may not have heard that phrase, it essentially means that a lot of times founders or PhDs, climate scientists have great research papers, great ideas, great IP that sits in national labs, but they very rarely actually turn into companies that are viable, have business models, and can attract private investment. So I spent 2.5 years building out a venture studio model alongside a co-lead who was actually the first Latina to raise millions of dollars as a hard tech founder. And what we saw was an opportunity to not only provide the first check-in up to 100K based off of milestones, but then also to allow for matching dollars, which is really important when we think about climate tech companies. I'm sure many of you know that they're not only enterprise software, right? They are that, but they're also many other things, including hard technologies, material science. So ensuring that there's a real understanding of how they grow that looks quite different from just a SaaS platform, as well as how do you bring in angel investors, VCs. So I was doing that for 2.5 years. And then what I realized was there was a lot of philanthropic family offices, various institutions supporting high net worth individuals who were coming to my team at the time. I worked for a company called Second Use, which is a global innovation firm, and asking how do we invest in climate and what does it look like to invest in climate tech in an additional way that actually solves for gaps. So I've spent the past several months, I know Lara and I will get into this, working with different foundations, family offices, and individuals to really look at not only how do we take the momentum that has come from VC. I'm sure some of you know this, but a huge chunk of VC over the past 2 years has actually gone to climate tech in ways that we hadn't seen before. So it's really critical that we're riding off the back of those dollars, particularly in this market, and ensuring that companies not only go from idea to prototype and viable business, but really from that viable business and idea to an actual growth stage company that ultimately is successful. So I'll be talking a little bit more about that, but that's the area that I've played in throughout most of my career, and I'm really excited about the different ways that I'm seeing multiple stakeholders look at catalytic capital. What does it look like to really fill gaps within the climate tech ecosystem in creative ways?
Great. You want to go next?
I'm happy to.
Yeah,
yep,
terrific.
I'm happy to be here. Thanks, everyone, for choosing to spend this afternoon with us. I run NIA Impact Capital, and NIA means intention and purpose. And I started in 2007 getting money to the banks that we knew would be most catalytic as far as getting out of the fossil fuels and into community-led businesses. So I identified 7 community banks across the country and got completely out of public markets in which was a really nice year in 2007 to get out of public markets and really choose the impact of that. And so 2008, I was not in public markets at all and had started doing early stage investments in my local community of Oakland, California. And primarily investing at the intersection of environmental sustainability and social justice. And what did that look like? Oftentimes it was a woman of color in my community who had an idea and didn't have anywhere to go for an investment. And so being a first check-in so that that entrepreneur could then say, hey, I have a check, I have an investor, and take that on the road to wherever they needed to go. Did that for a while, and now I'm looking at public markets as far as getting investments available to democratize access to the smart investments, the ones where we see the economy going. And of course, as we transition to this next just sustainable economy, how can we have everyone participate?
And we're going to keep going, but I'm going to stop every once in a while and just ask. So what did this typical person, can you just give us one example of a person who couldn't give a loan in the kind of business she had?
Say that again.
In Oakland. So you were
yes,
saying that
Oakland.
the typical person you give would be a woman of color who had an idea but couldn't.
Oh, right. So
Just give us one example.
Our banks across the country, and maybe the world, but I know better in the U.S., are not as prone to loan to women of color starting a business.
Right. So was there a specific business? I'm just curious that you.
Oh, sure. So we were able to help get the first money into a co-working space where entrepreneurs across the spectrum dealing with environment, with our local community, with different types of social issues and social entrepreneurs were able to come together with our banks and our lawyers to figure out term sheets and different things. And so to be able to get just the loan so that we could work with the real estate so that they could start that business. Yeah, and then another one I'll just say is on a different end of the spectrum is Kube Nice Cream, which is a really fabulous coconut-based nice cream. And
I'm sold.
it is fabulous, absolutely fabulous. Yeah.
Lara.
Yes, thanks, Leslie. So, throughout my career, I've been working in the climate tech ecosystem, and I've worked with startups, I've worked on the corporate side, I've been in government, I've been in academia. And so the piece of the puzzle that I've really been fascinating on is the need to scale climate tech faster. So that's really what we're working on at Early Climate Infrastructure at Prime. And so one way to think about this is that in a sense, we're focused on, the second valley of death. Chante mentioned the first one. So we're really there looking at a particular challenge that's facing a lot of climate technology. There are a lot of companies out there. They've gotten some really robust venture funding, which is great news. It's a very different kind of ecosystem than it was 10 years ago. But part of what's happening now is a lot of these very successful companies are starting to get to the point that they're ready to really commercialize and scale up. They need to build that first commercial facility or that first big demonstration. This requires, in some cases, tens of millions of dollars or even hundreds of millions of dollars. So these are checks that venture capitalists are not willing to write. They're too big. And so these companies are starting to look at other sources of funding, trying to look at things like project finance or loans, other things that can help them scale. And the truth is that a lot of these products really weren't built for the kind of risk and the kind of challenges that these companies are facing. So what we're seeing is a really yawning gap here in the second valley of death. So what we're doing at Prime and at Early Climate Infrastructure is figuring out how we can use philanthropy to help solve that problem. And we're doing it in two ways. One is through catalytic investment. So the idea is that we use philanthropy to co-invest alongside project financiers or other sources of traditional financing to try to bring them a little bit earlier and to help cover some of the risks that these companies face. The other thing that we're very committed to doing is understanding the systemic challenges that are putting these risks there in the first place. So what's going on with permitting? What are some of the reasons that the demand side of the equation isn't quite working out for these companies? And is there something, again, we can do with philanthropy to help solve those problems in a way that elevates whole classes of climate tech solutions?
And again, just because it sometimes helps me, and I hope our audience to understand, what is the kind of company that could be very successful, but what is it that would take tens of millions, or what falls into that? Can you give us an example of that?
Sure. One of the classic ones that a lot of folks are talking about right now is carbon dioxide removal. And so Commissioner Franz mentioned this a little bit ago, pyrolysis as one potential approach to really sequester the carbon that we see in the atmosphere. And so these are, big, in some cases, very complex plants that need to get built. And so they can easily cost tens of millions of dollars, particularly when you're talking about markets that tend to be very sort of thin on the economic side. So if you're selling a commodity, if you're selling carbon dioxide removal credits, if you're selling electricity, you may not have a huge amount of revenue to play with here. So with these really small margins and this need for a huge amount of financing, they're really risky, really challenging projects to get funded.
Okay, so now we have an understanding of the areas in which you play, so to speak. But this title of this panel is Deep Impact. So what makes something deep impact? Should we start back on that side of the couch again?
Sure. Yeah, I think a part of how I've looked at it throughout my career is really searching for gaps. So when we launched the Venture Studio in 2020, you actually weren't seeing the amount of VC dollars that you see now. So in 2022, a quarter of all venture capital dollars went to climate tech. That was not happening prior to that. And one of the reasons why we started to see more interest in VCs, more traditional VCs, even not just for those who are familiar with the clean tech era, many of the clean tech investors continued to invest, of course, but what we saw was an uptick in traditional VCs also investing in climate tech. And I'd argue that one of the reasons that that was happening is because you saw government saying, hey, we've been doing a lot of work on R&D. We've invested in national labs. We spent a lot of time thinking about what does it look like to fund research and universities, but we haven't really done a great job in taking that IP or those great learnings and turning them into businesses. And so when we launched what was called Venture, still is called, Venture for Climate Tech, it was really to help support those companies that were coming to us and saying, hey, I'm a PhD, I'm a scientist, I know a lot about the technical aspects or the science aspects of what I'm building, but I actually don't know how to turn that into a business solution. And so really helping them find co-founders and advisors that understood the business side of what they were building. And our whole goal was to be additive. We could have certainly just gave them money and said, hey, good luck, but we were trying to solve for the pain points, which I think Lara got at, specifically talking about the second valley of death. It wasn't enough to just say, here's a check, because of course we're solving for that gap, but we were also thinking about how do you resource those founders to optimize for success. And so I think one of the ways to think about deep impact, and the way that I've thought about it with incredible teams that I've had the privilege of working with throughout my career, is not to just say, here's money, which I think we need more money in climate. I know we all are in this room because we want to see the trillions of dollars that we need to solve the climate crisis, but it isn't enough to just say, hey, we're going to give money to this specific area where we're seeing a gap. We also have to really spend the time understanding what are the bottlenecks. And so that's been a real big part of the work that I'm doing now, the work that I've done in the past, and hopefully the work that if you all are starting or already, thinking about how you can move more capital into a space, not only saying, hey, here's the financial product, or here's the capital that can be deployed in this area, but also what are the bottlenecks and how do we actually solve for those? So I talked about the first valley of death. I think when we look at the second valley of death and really trying to get to commercialization, it's permitting and licensing, as Lara mentioned. It's also community engagement and equity. And how are you not only building projects for community, but also incorporating that lens into how you develop the science and the tech behind it. I'll give a very brief example and then we can move on. But one of the companies that we funded is called Voltpost. And what they're doing is retrofitting lampposts across the country, or existing lampposts for electric vehicle charging stations. Two awesome, incredible white guys, Luke and Jeff from Columbia, and they recognized that most of the solutions that they were building were actually going to have to be deployed in low-income communities of color. And so they applied an environmental justice lens into how they actually built out the R&D, thinking about how they can incorporate local artists into the development process, and not waiting until they were ready for, project deployment to think about those things, but actually incorporating it into the early stages of R&D.
I love that example.
Yeah,
that's
that's a
good.
great example. Yeah.
So I'll just take a step back just to say that all investing has impact, and I think we know that, and yet when we talk about impact, I think all of us here want to really be moving it to positive impact. And that just because you've done an early stage investment with an entrepreneur or moved some money, the rest of your money is actually still having impact. And it's sitting in what could be the status quo incumbent economy that has gotten us where we are, and it's gotten us into a lot of trouble. So I just want to be mindful that we're talking about moving all of the capital that we can into having as much positive impact as possible. So, everything from moving out of a bank that is financing pipelines, fossil fuels, international, projects into our local communities. I mean, that one move right there can be pretty deep impact. So I just want to say that this can happen across the scale. And then some of the things that we've mentioned also, getting a check to a woman or person of color who has an amazing idea, though has been historically disadvantaged in our cap table system. And I think I think a lot of us know, though, on this panel, for those in the audience that don't know, women founders from VC receive about 2% of the funding. Women of color receive much less. On the public equity side, it gets worse. So of the 80 to 90 trillion that are being managed out there, 0.7% are managed by women. When you combine women and people of color-led firms, we get up to about 1.3%. So moving money from our status quo managers toward women and people of color can be incredibly impactful. We look at the world a little bit differently. We're research shows that we're a little bit more holistic as far as putting the entire system in place. We're a little bit more cautious as far as raising up by bootstraps. And so when you see a woman or person of color, whether it's a equity fund, private equity for early stage, giving them a sense of time and getting them that first check can be incredibly impactful.
So at Early Climate Infrastructure at Prime, the way we define impact starts with massive greenhouse gas reduction. That's really kind of our biggest North Star. And we call it planetary scale greenhouse gas reduction is what we're going for. So we don't have kind of a specific numerical threshold, but we really want to work on the things that we think are going to make a huge difference economy-wide. Then the next piece of it involves two pieces, equity and direct environmental impact. And the equity piece, I just want to say one thing on this, which is that it's incredibly important to us for two reasons, not just because it's important for its own sake, that we really need to make sure we're advancing equity as we're transforming our economy, but also when we care about scale, it's actually a vital piece of the equation. It's really important that we're solving problems that matter not just to Palo Alto, California, but to the entire planet. It's really important that everybody is involved in these economic transitions. And if we don't get that piece right, we're not going to solve our greenhouse gas issues. The other thing I want to say, though, is to really lift up and foot stomp what Chante said, that I think when we think about investing for deep impact, really thinking about the systems level piece of this it's so critical. It's really important for us to understand what are the things that really drive the system, what are the problems that actually need solving, and can we invest, can we come up with solutions that really get at the heart of the problem. That's the most important way to get to scale. It's not necessarily just to invest in the things that look like good products or exciting climate solutions, but again, to really figure out what's holding us back and how do we unstick those things and solve those challenges. And when we can invest there, that's when you're really having deep impact.
So I'm wondering, ladies, in the last couple of years, we've seen some enormous pieces of legislation come out of Washington. And I realize none of you necessarily interface with that. But I wonder whether something like the Inflation Reduction Act, which puts all this money towards climate and is meant to scale battery manufacturing and has the carbon credits, how does something like that impact what you're doing and how you're thinking? And why don't we start at this end of the couch and we'll go that way, just to make things crazy.
Yeah, sure. So I spent some time at the Department of Energy during the Obama administration years, and it's a really important and fascinating organization. And I think the first thing to say about all this legislation is it's unbelievably exciting. Having spent some time in DC, this is not a picture, to be honest, I ever thought I'd see, that there's this much money flowing in these ways.
I've been covering it. And I was skeptical right up until the very moment it happened.
No, those headlines just floored me when it turned out these were actually a done deal. So I'm just so excited about it. And I think one of the other things to know that's really important about this legislation, this funding, and with what the department is doing right now, particularly under Secretary Granholm, is a big focus on deployment. Everyone is really caring about scale, and the fact that DOE is thinking not just about kind of technology development, which has really been its bread and butter in the energy world for a long time, and is actually trying to think about how do we get to deployment, how do we demonstrate things. I know that Jigar Shah is speaking and that he has a lot to say about deploying the loan.
No, I think Thursday
office.
Morning. Join us all Thursday morning.
So I think these are really incredible, really important programs, and so we're doing a lot of work to make sure we understand exactly where this money is flowing, how what they're focused on. Obviously, I think with government funding, there are still going to be gaps. There are always topic areas that are of focus at any given time. There's some reasons that government funding can't do the same thing that commercial money can. There's speed issues. There's all sorts of things that make it challenging. But overall, I think it's really important. It's really useful for all of us, I think, within the community to understand what's going on and see how we can be complementary. So that's what we're trying to do.
How about you? You've tried to get away from the public markets, but I wonder whether you've intersected with public legislation at least.
Oh, absolutely. I mean, just to echo Laura's saying is that this is so exciting and unprecedented to see this type of money going toward, things that can be really innovative and critical to our economy. I think just one thing that we probably all know is that we need to keep these people in office so that money continues to flow. Yeah, absolutely. And, we need more of it. And of course, on the local level, we've already heard from some candidates at the local level all the way to the federal level to get this type of funding what we need. And we absolutely see that because in managing our mutual fund, which is full of solutions-focused companies, bringing some of that to the U.S., particularly when it comes to wind, solar, and waves. We don't have any wave companies yet, but we're, offshore is certainly, on the horizon for us. So looking at all of the infrastructure for our largest turbines to, solar inverters and the batteries to, connect everything together, that's where this money's flowing. So it's really exciting.
Okay.
Yeah, I'll add, I think one of the areas that I'm most excited about is the $7 billion budget focused on the Office of Energy and Transportation. And that is specific to the deployment stage, which I know Lara and I are doing a lot of work around at the moment. The ability to say, hey, we're not only going to think about large loans, which shout out to Jigger, love his work. I'm really happy that we have these $200 billion loan opportunities. But when I think about the companies that I've worked with over the past few years, they really do need smaller amounts to get to a first of its kind plant or to pilot or to demonstrate. And really that office is solving for that exact gap. And so I've been spending a lot of time thinking about what does it look like to have matching dollars, since that was a lot of what I did through the venture studio model tied to public sector dollars or government dollars, right? That can really propel and accelerate these solutions to deployment. I think the other piece, since we are talking about equity, and I always think it's important to know that I'm sure many of you in this room already resonate with this statement. When we talk about equity and climate impact, as well as revenue, it's not a trade-off. We're talking about really thinking about the market, and the market is diverse. The market is indicative of people who look like everyone in this room and maybe others who aren't represented here today. I think that's important to state because whether we're thinking about it from an impact or a revenue standpoint, it's really important that we're building projects and companies and technologies that serve everyone and also capture the market for everyone. And I think the last part of what I want to make sure that I point to is the environmental justice piece and the fact that most of the Inflation Reduction Act is really ensuring that we're thinking about that at the forefront. And I think that's incredible because when I talk to founders, they're asking us to honestly move faster. A lot of founders are so excited about their ability to build equitable solutions, impactful solutions, and ones that really represent the world that we live in. And they find the frustration actually being with the financiers and the funders who can't understand the intersections at which they're building their companies. And so I love that the Inflation Reduction Act is actually this incredible, pilot in a lot of ways for how we can overlay environmental justice dollars for projects, but then also think about loans for, the actual facilities or ways that they think about deploying their solutions through projects. And then, of course, like I mentioned, the Joint Office for Energy and Transportation on the deployment side. So I think the ability to think about the Inflation Reduction Act as a pilot for how we fund things differently and creatively is what I'm most excited about.
Well, so we're running out of time, and I thought for our last round, what I'd like to ask everyone to do is talk about a success story in their portfolio that they're really proud of. Just to sort of, I think it'll leave us all with a good feeling, but it would be good to know how it worked. So we'll start at that end of the couch.
Yeah, sure. Yeah, I just spoke to her, so really excited to talk about her solution. We met an incredible founder originally from Atlanta, Georgia, named Lacey Reddix. And when we met her, she was literally just finishing up a research paper, and she had already had some industry experience, but came to us and went through our venture studio application, and our whole board were like, wow, she's really early. We don't know if this might be actually too early. And then they met her and they heard her pitch and they were like, wow, she has an X factor. We have to accept her. And so when we met her, like I said, it was a research paper. She since going through the venture studio model has raised over $1 million to focus on a company called Olokun Minerals, which takes brine waste from desalination plants and turns it into new minerals that can be sold back into the industry. She's moving so quickly. She really understands what are the right questions to ask. And her round was led by the former founder of HubSpot, who announced a new fund that's Propeller VC, focused on ocean and water-based technologies. And so I want to also mention that the ability for her to go from idea to prototype really happened in less than 8 months. She negotiated a license with NREL, and she's doing so well, already talking about piloting her solution and her process at desalination plants across the globe. And I just hope to see more stories like hers, which brings me to my final point. How do we think about really solving the pain points as we deploy capital? And I think that's really what we were able to do with Lacey, and I'm excited about everything that she's doing through Olokun.
Great, love it.
I want to follow this one and make sure that when she goes public, we can put her into the mutual fund.
I'm sure she would love that.
So fabulous. I'll just share that. Oh, we have 1 minute, so I'm going to do it quickly. We launched a climate solutions mutual fund, and it is now on about 10 platforms. So that is, it's NIAGX, and we look for entrepreneurs just like this one that is having super unique, I guess, solutions that will diversify across, that can go in any 401k.
Okay, last word, 30 seconds.
Really quickly, we don't actually have any examples yet. We just got stood up a few months ago, so we're in the process of making our very first investments and thinking through those right now. But I'll say one thing we're excited about is mass timber, since that was another thing that got mentioned earlier. And specifically, again, all the systems plays around it, not just those who are manufacturing mass timber, but how do you actually like train construction workers? How do you make sure that all the building codes are the right things in the right places? So we're interested in working in that sector, among others.
Terrific. So thank you all for your time, and thank you. And we're going to head out this way.